Hey everyone, welcome back to another 5-Minute Friday. Andy Smith with A&N Mortgage here. And this week I'm joined by Landon Hoon, a fellow colleague from A&N Mortgage and also my team leader. Landon, welcome.
Thanks for having me, Andy. Glad to be here.
So we're going to cover multi-unit financing this week. I'm going to set our 5-minute timer. Here it is. And off we go. So Landon, a lot of people watching the video are hoping to learn your top tips for financing a multi-unit.
Yeah, so I'm very passionate about multi-units. The majority of the clients I work with are people who are buying for the first time. They're buying a multi-unit for their first time. So I get very excited and I tend to talk fast when I'm talking about multi-units because I just get really excited. Typically, what I would advise is, one, talk to your mortgage lender, come up with a game plan. Two, work with a really good realtor who's experienced in multi-units. There's a lot of great realtors out there, but not all of the realtors, specialize in multi-units. And the multi-units in the Chicagoland market can be a little bit unique, compared to other markets. So that's my biggest tips of advice. Talk to your lender and have a good realtor that specializes in multi-units.
Absolutely. And I guess the great thing about working with a lender who has experience with multi-units like yourself is obviously you also have those connections for people who have experience with multi-units, property inspectors who have experience with that. So good tip there. So in your opinion, Landon, what would you say are the best products for purchasing a multi-unit?
Yeah, so there's three main products you use when buying a multi-unit. Number one would be conventional mortgages. So that's Fannie Mae, Freddie Mac. So conventional mortgages, when buying a multi-unit, is going to require a little bit higher of a down payment. So for a 2-unit, they're going to require 15% down. And then for a 3 and 4 unit property, Freddie Mac's going to require 20% down and Fannie Mae 25% down. There is a special product with Freddie Mac called Freddie Mac Home Possible, where if your income is below $71,280 a year in the Chicagoland area, you can buy the multi-units with a little bit lower down payment, which is 15% down. 2 is FHA. So FHA allows a down payment of 3.5% of the sales price. So for people who don't have very much in regards to assets and they're trying to buy a multi-unit, FHA is a great option to get into that first multi-unit. And then the third option, which is kind of a unique program specific to A&N Mortgage, is a 10% down program for multi-units, which is backed by local credit unions.
And then Landon, I guess while we're talking about those products, we should also take a side dive into house hacking, right? We've talked a lot about that as a team. Definitely a trend that's come around and has almost become more popular during the pandemic, would you say? Like house hacking has been a real trendy thing to do.
Yeah, the market's been really hot for multi-units and everything.
Right.
Yeah, and house hacking, a great tool for people out there who are really interested in getting into house hacking. BiggerPockets. So they have books, website. Check them out. It's a ton of investors worldwide on there, and you'll learn a lot of tips. So it's a great site to check out if you are looking into getting into house hacking.
So Landon, one of the other things I really want people to understand is using rental income to qualify or to help qualify for a mortgage. Can you talk a little bit about that?
Yes, that's a great question. So we are able to use the rental income for the units that the buyer is not living in to help increase their pre-approved amount. So let's say someone's buying a 4 unit and they're living in one of the units, they are able to use the 3 other units to increase their pre-approved amount. And if those units are currently vacant, we're able to use the rental income from the appraisal report for the market rents.
So before I ask my next question, I know the first answer, and that's going to be do your homework. And my question was, or is, what are your top tips when you're buying a multi-unit? And I know already you're going to say do your homework in terms of properties and products.
Yeah, that'd be, maybe you'll figure out what your goal is. Are you buying a multi-unit to, maybe live with, another family member in the other units, or are you buying a multi-unit, as an investment, you plan on holding it long-term? So have that game plan, but also know of, what neighborhoods do you want to live in? Is your biggest thing, about you want the property to appreciate, or do you worry about cash flow? So kind of just identifying exactly what your goals are. And once you do identify what your goals are, really have an in-depth conversation with your loan officer. Andy and I are both happy to help out.
Yes,
and then find a realtor that knows their multi-units.
Absolutely. Yeah, definitely. Well, Landon, this has been great, super informative. I know all our viewers will love all the knowledge that you've dropped. So thank you for sharing. I think that's probably our 5 minutes up there. So maybe we'll have you back again soon. We can talk about some other interesting topics related to the mortgage world.
All right, sounds good. Thanks, Andy.
Well, guys, I hope you've enjoyed today's episode. Please reach out to Landon and I if you need any help with multi-units. It's definitely something that we have a passion for as a team, and we'd love to help you get on your investment journey. Look forward to talking soon.